Great is great minds. You're welcome to the documentation. In this video, I'm going to be explaining the Incognito 3.5K challenge and how it's going to work. So the first thing we have to talk about is the project, moving $10 to a 3.5K. So I'm going to be talking about the process and how this is going to work, how we're going to be able to achieve this. So the first thing is we will be splitting this 10K or this $10 rather. We're going to convert this $10 into $1,000, and we're going to be doing that through the help of cent account, and then automatically new capital becomes our new capital becomes 1,000. So this is the parameters that will be required for us to achieve our number one, which is this here. Okay, so this is the strategy we're going to be using to move gradually. Okay, so first of all, we convert the $10 into $1,000, and then we risk $100 on every single trade, and then we look out for a risk to reward ratio of 1:5, and then our win rate, we use a strategy that can guarantee us a minimum of 50% win rate, and then we only trade high probability setup, of course, to ensure that we get something even above this 50% win rate. So the trading cycle, so for the trading cycle, we'll be looking forward for a 12 weeks trading cycles, meaning each cycle will end in 1 week, and the next week another cycle will start with, and that is it with the first part of the documentation. So the next one is the strategy, HTF, trend following strategy. Now what this simply means is higher time frame trend following strategy. Let me show you guys. It's a very simple concept. So this is a higher time frame, 4 hour. So we'll be looking forward to take our trades from the 4 hour, and then all we are doing is following trends by looking forward to when price breaks structures like that, and then we know, okay, there's now a market structure shift from the high. Of course, the price was going high at this point, and then right here we have a market structure shift officially happening in the 4 hour time frame, and now we know there's a change of structure. We look forward for a return into an institutional reference point, and if that doesn't happen, we look forward for the next one, which of course happened here. Yep. So, and then if we didn't get it, then we'll wait for another one. This is the next high that was created, right? So yeah, this is the current high that was created, and then the price went down up to this level. Price came down up to this level before going high again. Now that the price went high, we'll be looking forward to take our entry somewhere on this particular bullish candle from the body to the wick. This is a very simple concept that you might already know already. And we take our entry in such areas, then we put our stop loss on this very level here. Now, and we're not touching it. Once we put our stop loss there, we don't touch it. We leave it until it hits our TP. So yeah, that's the strategy. You can go on your chart and check it out and see how price has been respecting structure and keep happening over and over and over again as far as you're looking out on the 4 hour time frame. It doesn't mean that you might not grab one or two loss 1 or 2 times, but the difficult thing though is when the price change trend, for you to be able to identify that, okay, the trend has changed and follow the trend. That could be a little bit difficult if you are not watching the chart clearly, but if carefully, I mean to say, but if you are carefully watching the chart, you will definitely see when the change of character happens, and then you begin to take action. So meanwhile, towards the end of this video, I'm going to be talking about a particular robot, an automated system that is going to help show when those things have happened. So the robot is going to be the one to be checking out for these signals and be dropping. The robot is not going to be trading for us. It will only be helping us to check what's happening in the market and give us report in real time. So you'll be getting alert on your end. as they are happening, you are getting the alert on your phone. So that is all about that particular session. And so after that, the next thing we have here is the trading psychology framework. It's a simple concept also, but this is the most powerful among everything we are doing here. So the concept of the trading psychology framework is that it helps you to ensure that we can follow all our rules as they has been set aside to take the challenge from the start to the finish. Now, if you have been trading, regardless of the strategy you are trading or the concept you're using to trade, be it ICT or wherever you are using, times is not because your predictions are wrong or something. Most times you can blow up your account just within 3 trades or 4 trades or maximum 5 trades, and your account is gone. But if you agree with me, you know that is not supposed to be like that, because if you have, regardless of the strategy you are using, you need to give your strategy room for the strategy to prove itself to be either good or bad before you can say your strategy is poor, right? So at least, or on a normal sense, you should be able to trade up to 100 times before your strategy before blowing up your account. So that would mean that your strategy is poor if you take 100 trades and lose all the 100 trades in a row, right? So that's how it's supposed to be on a normal day. That's why the concept of percentage comes in. So out of 100% capital, if you're trading following the proper rule, trading with a 1% of your equity at a time, then you have 100 trades to blow it. That's the right way. Trading with 2%, you have 50 trades to blow it. So but most times, that's not the case for us, and that is due to we're not getting our trading psychology framework properly. And that's what we're going to be doing. And how we're going to do that is we're going to be having, we're going to be doing something that I believe the professional traders are doing, which is professional traders, people who trade like the hedge funds that manage funds for companies and banks and people and all of that. They don't just they don't just rely on their willpower to follow their rules and manage the equity they are working with. So they work with some automated tools now, and they also have managers, people that manage their account, right? So them that are traders, their job is just to come there and use their knowledge, trading knowledge, to trade on the account. But in terms of managing the equity, there are automated tools and also an individual that manages the account for them, that supervise what they are doing. Now, give example, if you have traded a prop firm account before, you know that there is something called DD and MD. Now, that DD is a daily drawdown, and once the price hit once you lose up to your DD, your account will be automatically terminated. Your trades will be closed. Your account will be terminated. You will receive an email telling you that you have breached your rule and now your contract with them is terminated. Now, the same thing I believe happens on that level as well. So the same way that they manage equity, those professional traders to manage the equity, you don't just rely on your willpower alone, right? But the difference is when you hit that DD now, your contract is not being terminated, but you will not be able to trade again till the next trading session. Now, depending on the individual, if you are the one that start your trades from the London session, you will not be able to place a trade again till that after that London session. Then your account will be reopened for business. Now, that helps you to ensure you don't over trade, you don't over leverage, you don't do things that are out of the rules, right? So, and there's also what they call consistency rule. Most people, they complain about that with prop firms, but that is a real thing. That's a real thing that happens when you're managing funds on a professional level. That helps you to ensure, you don't just go and start over leveraging the accounts, opening too much big lot size and all of that. So all this same framework will be incorporated into what we are doing, and you are going to have someone that's going to be managing your equity. So if you want, you could make me your account manager. I'll be managing your equity, or you'll be the one managing the equity while I'll be the one executing for you. But however, we all are going to be collectively working as a team, one person managing the equity and one person trading, to ensure that all the rules and everything that we're going to set will be followed properly. For a full document that contains the trading strategy itself, like the technical analysis and everything. I'm supposed to explain that on the first session actually. So for the document that contains the full strategy we're going to be using, I'll be sending that to you also based on your request. When you have joined our team, you'll receive the document. You go through it. It contains every strategy we're going to be using and the rules we're going to be following. Like every single thing actually is on that document that you need for the trading. But the trading psychology framework is just to ensure that you can be able to follow that rules that is outlined on that document. And what we are trading is pure ICT strategies we are using, but not like big complicated things, just simple trend following strategy, leveraging on some of the ICT knowledge that we have, right? And it's as simple as that. So the next one now, which is the growth strategy. Now this is where we work with compound interest and also saving. Now every single our goal, right, is to grow our account. As we're growing on every single trade we take, as the account is growing, we keep increasing the lot size we are working with, right? We keep increasing the amount we are risking. Remember I said from the beginning here, we're going to be, our risk per trade is going to be 100, right? But that will not continue. When we get to a particular point, we will start increasing our risk per trade. From 100 it will start growing. Okay, now I might not be able to give you the breakdown now, but it is also contained in the document you're going to receive to see the breakdown and how it will be going. That's one. Now two, there's going to be another saving account again. Now that one is because when you are increasing your risk, you are exposing your total capital, which is this one. Now your total capital is being exposed to the market, so there need to be a saving. Now this is something that each time we hit a certain milestone, we take a certain percentage of the account, withdraw it and put it on a saving account where we are not trading with it. Is not open to any risk of any sort, and it will just be there. Now if the challenge fail at any point, now and just in case you don't know what it means by the challenge failing, is that we lose our total capital. So once we lose our total capital, that means the challenge has failed. Now once that happens, we will have this thing to fall back to, this one, which is the savings account. Whatever is in the savings account will be what we can now split and do whatever we want with it. If we want to take the challenge again, a part 2, we can also leverage on the funds that will be on the savings account to go for part 2, or do whatever we want with the funds that is here. So that's the concept. Number 1, we're going to be using compounding, and number 2, we're going to be saving some percentage of what we are earning. Then we compound the rest. I hope that makes sense, right? So that is that for that. And also a detailed explanation on how they compound, a percentage that will be compounded, the percentage that will be saved, the milestone that will be reached before the savings will happen, and all of those details also will be on that document. Everything has been written out, and there's no need to crack your brain at all. So next thing here is the practical consistency method, auto signal. So this is about the robot I said that is going to be helping us to generate the signals on the chart. We're going to be creating, each and every one of us is going to have their own. They'll be sending you messages on your devices, on your MT4 or your MT5. So the robot will be hosted on the server to ensure it's running 24/7. So you're going to be buying a VPS, which is a server space for you to be able to host the robot and receive those messages. Now the VPS cost about $10 for a month. So every person that's coming in is going to be getting the VPS, which simply means a virtual private server. So what's going on here is that the robot itself is going to be, let me take you to the chart. So the robot itself is going to be looking out for every single support level in the marketplace on the higher time frame, from the daily to the weekly, from the daily down to the 4-hour time frame. You check out for every support level. Once price reaches those levels, it will send you a message so that in case you are busy doing other things, you can quickly go check the market and know the next action to be taken. So the robot will be the one to be generating most of the signals. So our own is just to come in and manually execute the trade, confirm that the setups and the signals are correct manually, and then execute the trade. Now we will not just rely on the robot alone. I will also be carefully like whenever the robot drops a signal, I'm going to carefully analyze it and then update us in the group, and every one of us in the platform, we also make our contribution to the signal to be sure that the setup we are seeing is true, because what we are trading is trend, and if trend is true, then trend cannot be hidden. If I'm seeing a buy trend, you should also see a buy trend, right? And that's the principle we're going to be leveraging on to ensure that we are only trading on high probability setups. So that's all about that one. So now let's talk about the actions you need to take right now if you are ready to join us while we kickstart on the project. So the first action you need to take is to register on Just Market. Now this is the broker that provides us with the necessary things we need, such as a good spread, just all the basic things that a broker should provide. But most importantly, they give us this concept here to be able to convert this 10 to 1,000 so that we can be able to trade effectively. So that's what happens on the Just Market. Now, if you have not registered there before, you can just ask me and I will send you my link and to register on the platform and verify. Verification is also easy on Just Market. Now, the next thing you need to do is you need to deposit a $10 on your account after you have registered. So you are not sending this to me. It's not necessary. You can deposit it on your own account directly, and after you have registered, and you are good to go. Now, the third step here is you have to send in your funds for the VPS, $10 for 1 month subscription for the VPS, and then after that is the configuration of the VPS and the robot, which I am going to send to your email. If you have done step 1 and step 2, right, you will be added on the group, and then you do step 3, and then I send you the robot to your email, and as well the login for the VPS you have paid for on the step 3. Now, just a quick note here. If you cannot undergo the stress of installing the robot on the server, just reach out to me and I will assist once I am free. Okay, there's no big deal on that. And this is an extra note here, which is okay, we will be trading all volatile FX market. Yeah, just in case you're asking, what forex pair are we going to be trading? We'll be trading every single forex pair that is volatile, such as gold. We might also be looking at US30. Anything that is volatile, we are not afraid. We are ready to risk it. We are ready to move with the market trend on a higher time frame. And that will be all for the meeting. If you have any specific questions, you can go ahead and ask me, and I'll be very glad to attend to your queries. Thank you and have a lovely time.